Welcome back to Grufity, where we discover the joy of investing. Today, we're telling the story of a giant that once ruled the world of computing and then somehow lost its crown. This is the story of Intel. For decades, if you owned a computer, you owned an Intel chip. Intel Inside wasn't just a slogan. It was a statement of total dominance. So how did the company that powered the digital age end up losing $3 billion in a single year? Intel's empire was built on two pillars. First, they designed the world's best processors. And second, unlike almost everyone else, they built their own factories, called fabs, to manufacture them. Owning both design and production made them nearly untouchable for years. But dominance made Intel comfortable. They missed the mobile revolution entirely. Every smartphone in your pocket runs a chip that isn't Intel's. Their manufacturing fell behind a Taiwanese rival called TSMC, and a scrappy competitor named AMD started eating their lunch in PCs and servers. Look at Intel's revenue over the years. It grew for a long time, but then flattened and stalled around $50 billion. In its most recent year, sales barely budged, up just over 1%. For a former growth machine, that's a warning sign. Now watch what happened to profit. Intel used to mint money, nearly $7 billion back in 2007. But by the most recent year, that turned into a loss of over $3 billion. The profit engine didn't just slow down, it went into reverse. That loss shows up everywhere in the numbers. Return on equity is negative, meaning shareholders' money is actually shrinking. And the operating business is losing money before you even count interest and taxes. This is a company burning cash to stay in the game. So why is Intel spending so aggressively? Because CEO strategy is a massive bet on catching up in manufacturing. They're pouring money into new fabs, chasing cutting-edge technology, and trying to become a foundry that builds chips for other companies too. It's expensive, and it's far from guaranteed. Here's the cost of that ambition. Intel invested nearly $12 billion in capital spending, which pushed free cash flow deep into the red, negative $3 billion. In plain English, the business is spending far more than it earns. That gap has to be funded somehow. It's not all doom, though. Intel still generates real operating cash, nearly $10 billion a year. Debt is manageable, and the balance sheet is solid enough to survive the rebuild. The turnaround is a real possibility. It's just going to take time and nerve. And yet, the market has already gotten excited. Intel's stock is up a staggering 480% over the past year, on hopes the recovery is real. But with the company still losing money, the valuation now bakes in a lot of optimism. Buyers here are betting on a future that hasn't arrived yet. So where does that leave Intel? It's a legendary brand with a fixable business, but it's mid-turnaround, unprofitable today, and priced for a comeback that must actually happen. It's a fascinating story, a fallen king trying to rise again, but a risky bet. As always, do your own research, and let's discover the joy of investing together. If you enjoyed this deep dive into Intel, hit that subscribe button so you never miss the next story. Tell us in the comments, do you believe in the Intel comeback, or has the king fallen for good? We'll see you in the next one.